What up, y'all? Want to do a quick little video here talking through some market action as well as some news that came out today. The past couple of weeks, very intense volatility in the S&P and across the board. All stocks, have given back a lot of the gains that they've been seeing. So the Federal Reserve today announced they cut interest rates by half a point, and this is to combat virus fear. And this virus fear, let's talk about that real quick. So first things is it's just terrible what's going on with this virus. Obviously people out there getting sick and dying because of it is one awful. That is a huge fear. Is what do we do to beat this virus? The fear that the markets refer to and that the Federal Reserve is trying to combat is speculation as what this virus means for businesses. A lot of these communities and areas that are highly populated and affected by this virus are just straight up shutting down. They're unable to operate and they're unable to, produce. A lot of these people that have been working, steady jobs for economies have now kind of been taken out of the picture, which they should be doing. They should be, staying healthy and staying safe. So once this data comes out, that's when there'll be a little bit more of an informed decision on where the market should head. It's hard to imagine a future where this virus has a positive effect on the economies. Like I said, a lot of these businesses are shutting down, unable to operate, so they're going to be taking heavy losses. When the data comes out, we'll be able to see those losses and kind of assess the damage. So that's the fear that these markets are talking about. So to combat that, Federal Reserve today, they cut interest rates by half percentage point. And what that means is it's to incentivize spending. Interest rates affect borrowing money. So the lower the interest rate, the lower the cost to borrow money. And you can see here that as interest rates have fallen significantly in the past, consumers and businesses will increase spending. And what that does is it traditionally causes stock prices to rise. So that's the mechanism in place here. The Federal Reserve is trying to employ here. The mindset being, hey, let's lower interest rates, people will buy, and it'll outweigh that fear. My perspective is the price point is still too high. I think that overall markets currently, and they just have been trading too high for a very long time. Looking back, January 25th is when I started initiating some short coverage on the markets, just really referencing basic investing principles: buy low, sell high. At the time, the S&P was trading at $328. You can see that was back here about January, $328. And since then, we've given back some of those gains. So the short position has made a little bit of money, and now the immediate looking is for the future. Where do we go from here? So since this big decline, I've covered a bit of my short, looking for this bounce. As things fall, there's this concept of a dead cat bounce. What that means is even a dead cat will bounce if it falls from a great enough height. So that's what I've been looking for the past couple of days. And with today, that kind of confirming since the beginning of the day, pulling back, it'll be interesting to see where we head now. The Federal Reserve has cut interest rates. Their goal to increase spending. The increased spending is theoretically their goal is to increase the rising stock prices. I'm betting that we're still too high. I don't think that interest rate is a good enough deal for businesses. I think maybe there's a little bit of consumers who may jump in at this opportunity, buy houses, buying cars. But that interest rate could then just be risen at any time. So I don't really think this is the great mechanism to employ right now. I think it's a little bit dangerous for anyone out there looking for a loan right now. If you are looking to buy and you think that this interest rate dropping is a good opportunity, I would advise to give it another look. So again, looking still short here on overall markets. The next couple of days, we will see which way we are looking to head. As of right now, we're looking very, very bearish. Looking down here at this 285 level on the S&P 500. Looking to test that here tomorrow. Tomorrow, if this interest rate drop does boost this economy, I'll still just again be looking for another reshort. I can't imagine us getting back up here to 339, all-time highs. If we do, I will be throwing some money against that. So if you guys have any questions, we have a Discord server up and running. I'll put a link down here. in the video description. You can join up, hop in our Discord. We could talk any of this stuff through. And if you appreciate any of this video, if you'd like me to keep on doing it, make sure to like, comment, and subscribe, my dudes and dudettes, y'all. Have a good rest of the day.